Craig, real quick, you said on the assets end, you were really focused on like cash and cash equivalents and investments. What are kind of the first few lines that you immediately look at in the liabilities section?
In the liabilities section, a big one is debt.
Okay.
And so these guys don't have any. And so that is a good thing. That's kind of like the main liability that I'd look at from like looking at the balance sheet health. Some people will argue, especially in like retail context, that operating leases can get treated like debt, which is basically to say, like, if you run a sporting goods store with a physical location and you have an operating lease, which is basically like you lease the space or you pay rent to use the space to sell your goods. A lot of people will treat that as a debt-like item because it's essential to running the business. Like you couldn't run your business if you weren't paying your rent or your operating lease for the space. But even here, so their operating leases are like 96. It's like a tiny, tiny fraction of their cash on hand. And then, of course, the other component of this, like if you have a ton of debt and no cash, your first thought might be not a great sign. But then if you go down to their income statement and you see that their like earnings before tax or their like operating profit is really high, then all of a sudden maybe you're less worried about that. And so here, this I think is actually a fascinating story. You can tell me about Moderna. So the first thing in the income statement you look for is basically you read this top to bottom. So in the balance sheet, I'm picking and choosing a little bit items I care about. So let's start with revenue. So we have total revenue that's broken into product sales and other revenue. And what was total revenue in the first quarter of 2023?
Just that number?
Yeah.
1,862,000 or whatever it is.
Yeah, but this is in millions, so $1.8 billion.
1.8 billion. Yep.
But what was it in the first 3 months of 2022?
6 billion.
Yeah. So tell me about that.
Well, thinking just about the past, year and a half, in 2022, they were probably administering a ton of vaccines, selling a ton of vaccines to governments and whatnot. And as people got their first and second doses, people have started to coast more in 2023 and haven't been, receiving vaccines as frequently. So they've probably, that kind of explains the dip in revenue.
Yeah, exactly. Yeah. So this is like, I feel like everybody always thinks that stuff moves up and to the right and that, your revenue will always grow year over year. But this is a classic, excellent example of a company where their revenue like fell off a cliff because they produced this thing that everybody needed. And now like they still produce it. And now like, there are a lot of people still getting boosters, but their revenue, at least comparing the first 3 months of 2023 to the first 3 months of 2022, totally fell off a cliff.